Geopolitics is something that's so big that unless you have a market panic, what do very young traders in certain cases on market floors, how do they view that?
Well, I think they need to be aware that some risks will be different to what they've seen before. Certainly currency risks will be different because currencies are often the shock absorber. We saw that with sterling, maybe we see it with the renminbi in China. When you have these tensions, currencies take the strain. And so either currency hedging or looking for opportunities in currency is something that maybe people haven't done for a long time. They've neglected currency risks. So some of those risks have been neglected. Others are opportunities, and I think traders need to take account of this temporary nature of some of the things. Where will we be in trade relations in 2, 3, 5 years? That's what really matters, because the discounted value of an asset is dominated by what's in the out years, not what's in the next year or two.
How does the dollar fold into that? You're on the buy side, you're not making a forecast call on dollar yen or euro dollar, but what is the dollar call that you see that will affect currency swings for multinationals?
Well, the dollar's on a multi-year uptrend. I think the only thing that's likely to turn that around, it could happen in the short term, is a little bit of news on the trade front, because dollar's definitely pricing in a more aggressive trade stance, US versus the rest of the world. And although we're confident in that longer-term dollar view, I think there may be a bit of relief for those who see the dollar as, short-term overvalued. If you see new light at the end of the tunnel on the trade front. But other than that, the divergence between US economy and the dollar and the rest of the world is likely to continue into 19.
Rick, with the dollar and the currency conversion, there's got to be an opportunity there. You mentioned you're underweight Europe. Where are you overweight?
We're overweight in US. And we're a little bit overweight in Asia-Pac. Japan, we think, is offering good value. In fact, if you step back, equities overall are offering reasonable value. You've got mid-teen PEs, you've got very controlled core inflation, you've got interest rates that generally are low, you've got a synchronized increase to normalize in some cases, but that's a pretty benign environment for an equity investor, despite the short-term volatility.